I think that it's fair to say that the high incident rate of lender rate rises during the course of the year, fueled by other outside influences, meant that perhaps short-term lending may have become more of an attractive proposition for people.
Hey everyone, welcome to 2024 and another edition of Superprime UK with your MJ Group Superprime Valuers, myself, Rob Cohen.
Myself, James Wild.
Welcome back everyone, super exciting show today. We have the CEO of the Association of Short-Term Lenders, Vic Jannels, and we'll be offering a new format for the coming weeks with special guest appearances. So really excited to be back, James. We are in the thick of 2024, at the heart of January. The markets are moving. How have you been?
Yeah, no, really good, thanks, Rob. And, a reasonably busy start to the year, building on a pretty busy month of December 23. Just a notable point there in terms of the data, Rob. December 23 was the highest weekly sales we saw in the whole of 23. So I think all of those deals got wrapped up in the final week, 190 weekly sales then. So we were definitely busy that week, just sort of closing off all of our valuation reports and due diligence for our clients there. So that's definitely reflected in the data. Where we are so far for January 24, it's been steady in terms of new instructions. Sort of latest week of around 170, so it's slightly below the average for what we were seeing last year, but properties trickle feeding into the market. In terms of the weekly sold data, breached the 100 mark, 103 this week. So sales have just been ramping up there. But the under offer figures look quite strong at 170.
Yeah, I think everyone wants to know what's going to happen in 2024. The year has started with good sentiment, positivity, and most importantly, an attractive mortgage market. We're seeing some really good competitive rates come from the high street, backed up by HSBC's 3.9 rate, nationwide this week, 3.84 5-year fixed rate. So the market is really hotting up. Why is it hotting up? Because the markets are building in 8 or 9 interest rates reductions over the next 12 to 24 months. So broadly speaking, the main high street lenders believe in January 2026, there's a really good chance that the base rate could be somewhere around the 3% figure, maybe slightly below, maybe slightly higher. Because of that now, the mortgage market is able to hedge against that and offer up some really good, attractive rates, which in turn should entice people into the market in terms of buying and refinancing, which all put together should have a better performing year in 2024, James.
Yeah, no, thanks, Rob. I think those people that have been on there, just hovering on their trackers and variable rates for the last quarter or so, the emergence of these new rates, like I said, from Nationwide, just on the 2-year fix as well. Barclays, one of the sort of most competitive on the market there, 2-year fixed at 4.12 as well. So that's really going to entice people to start moving off those, like I said, those trackers and variable rates, possibly into the market for an acquisition, or certainly in terms of that refinance market, which might boost those mortgage approvals, which happened on the decline over the last quarter or so. And moving on to our special guest for today, welcome Vic Jannels, CEO of the Association of Short-Term Lenders. So welcome, Vic. Thank you for joining us.
Thank you for inviting me. I'm delighted to be here and very interested to hear the comments you made in your opening, which are very much relative and representative of where the market is at the moment. So thank you.
Thanks, Vic. So to start off with, can you give us an introduction of the ASTL?
The ASTL, that's of course the acronym. It is the Association of Short-Term Lenders. Historically, it would have been known as those lenders who were purely in the bridging sector. And back in around 2012, my predecessor and his colleagues at that time decided to form the association with two or three main specific aims in mind. Number one was to try and bring the market together, and number two followed on very quickly from that, in that it was to create a code of conduct and a set of rules. And the reason they did that was very simple. Historically, the general public view of the bridging sector, I think if there's anyone else in the room old enough to remember it, I certainly am, the view was that it was not a very good market. It was extremely expensive. It may well not have been offered to the general public in the very best way that it should. And it made sense that somebody would come along, create an organisation and deliver a set of rules and a code of conduct by which the lenders could operate. And that began with a very small number of lenders around 2012 and has grown since then to the organisation it is today. I'd like to pay at this point a very special thank you to my predecessor, Benson Hirsch. Benson sadly left us in 2020, having suffered an illness for a number of years, but he'd strived to make this the best thing it possibly could be in the short-term lending era. And a number of the people who were with him at that time are still within the organisation, and they ought to be congratulated and thanked for bringing us to where we are today.
Thanks, Vic. And just sort of bringing people, some of the market leaders together in that space as well. So reflecting on 2023, can you talk to us about the performance of the short-term lending market during that period?
I think it's fair to say that it had a particularly good year. And of course, bear in mind, I can only speak for the members who are part of the ASTL at this point in time. And I think we may well look at the numbers a little bit later in this conversation. But the membership itself at the end of 2023 had approaching 9 billion of mortgages under management. And that is a superb increase over the last 2-year period, taking into account the latter part of the COVID era, and also as the market came back together, of course, the hike in inflation, cost of living, etc. So it has been a particularly good year and one that we're hoping will follow in 2024.
Yeah, you mentioned earlier, now approaching nearly 100 members and associates, so a real, what I'd say, stranglehold in a positive sense of the market and growing, and you know, probably a testament to everything you said previously.
I think it's fair to say the target is there. We have an executive board which is made up mainly from the lenders, with associates who join with us as well. We're looking at trying to get as many members on board as we possibly can, simply because it makes sense that we all work effectively off the same hymn sheet, if you want to look at it that way. There are members out there there are lenders out there, I beg your pardon, that we would really like to come and join with us. But we believe that the strength that we have working together within the organisation, listening to each other, learning from each other, and learning from what's happening out there in the wider marketplace will give us the strengths that we need to see 2024 become another record year for us.
Thanks, Vic. And just in terms of what consumers are using a lot of these short-term lending products, why the growth in the last 12 months or so?
I think that it's fair to say that the high incident rate of lender rate rises during the course of the year, fueled by other outside influences, meant that perhaps short-term lending may have become more of an attractive proposition for people. Although I don't want that to be the bedrock on which we did our business last year. The fact is that our lenders are professional, their products are attractive and competitive, they operate quickly, and they operate with the interests of their consumer at mind. And I think that the more we've been able to get out into the market and encourage consumers to understand that actually this is another source of mortgage lending rather than one to be avoided, has been a reason for the growth and will continue to be a reason for the growth.
Thanks, Vic. And in terms of funding lines closing the gap on rates when compared against the high street lenders, is there now a risk of some of those funding lines of the bridging lenders and the rates they're offering their clients, a risk of those becoming a little bit static when compared to the high street lending market? And as we spoke about earlier, there's been some quite aggressive cutting of some of the 5-year fixed and 2-year fixed products, as we mentioned, by the nature of Nationwide and Barclays.
I think we shouldn't mix the two. Bridging, short-term lending, whatever terminology you want to use for it, is for a specific reason. A term loan borrower will take a term loan. I guess it's fair to say that in the early part of last year, because lenders' interest rates, and I'm talking now about the term market, lenders' interest rates were higher, their affordability calculations were stiffer. It may well be that led automatically to more and more people perhaps turning to the short-term market. I'm not saying that was right or wrong, but it did have an effect on the growth in that sector. I think we are in an interesting position, though, taking the point that was just made about interest rates. On Monday this week, Nationwide reduced their interest rates while Santander increased theirs. I think we maybe need to wait a week or so until the Bank of England sit and determine as to what they're going to be doing with bank base rate. However, it is fair to say that in the early part of 2023, you could look at a 12-month bridging loan on a regulated basis where the interest rate, subject to loan to value, may well have been lower than equivalent term loan from a high street lender.
Thanks, Vic. Just in terms of breaking it down a little bit in terms of the short-term lending market, is there a particular sector of the lending markets that has seen the most growth in recent years?
I don't think that we can look too long-term into that area because short-term lending is designed for exactly what it says. It's for a customer who wants to borrow the money over a short period of time, knowing that it's going to be repaid, and normally that will have a given and approved exit route for the short-term lender. There's always been the requirement for chain break finance, for example, where maybe a property chain has broken down due to one participant having to pull out. It's useful for people who are upsizing or downsizing and aren't able to sell their current property in time to ensure they can secure the new property. So I'm not absolutely certain that the need for short-term lending has changed particularly, but I think the market has been changed in such a way that it's caused to bring it more to the fore, if that makes sense.
Thanks, Vic. And just drilling down slightly on that, the last sort of 12 months, 24 months, there's been a lot of domestic homeowners going to the auction market to acquire properties, and I think what goes hand in hand with that is home renovation products, heavy refurb products, which I think in the short-term lending market, there's been a bit of an emergence of those specific products there, just to facilitate and help their clients as well.
Can I take those the other way around?
Yeah.
I think it's fair to say that because the market in the term sector has become more difficult, people have looked at the sheer cost of moving. If you take account of stamp duty, legal fees, removal fees, selling fees, etc., you add the price of those all together, sometimes it becomes a very attractive proposition to spend that money on the house you're living in rather than go through the process and the upheaval and heartache of moving. So yes, we've seen a fairly substantial increase in the level of both light refurbishment and heavy refurbishment, perhaps somebody building an extension at the back of the property. To revert to your first point with regard to auction purchases, I think it's possible to say that it varies across the sector. There hasn't been a marked uptick, but it nevertheless has been quite prevalent. And what we've noticed quite often, as all my members know, I wear another hat and also run a brokerage firm. What we've noticed is that the clients who've looked to buy at auction have invariably been unsuccessful, simply because there are some very wealthy investors out there who've been outbidding and buying properties, perhaps at a level in advance of their worth, in order to build to their property portfolio.
Thanks, Vic. And just now focusing on the ASTL. Yeah, we've spoken about a number of the benefits, but how does it really add value to the sector?
That's actually a really good question, and one I'm really delighted you asked. The ASTL is a moving beast. We can't stand still because the market doesn't. And so nearly 2.5 years ago, we prepared using YouGov a white paper to try and identify exactly what the public thought about short-term lending. We used the term bridging. The term bridging is beginning to disappear from the radar. I'd like it to disappear in its entirety because it harkens back to the days when it wasn't particularly well thought of. The YouGov investigation perhaps didn't surprise us, although it confirmed the information that we needed in order to take our market forward. And that was in the younger to middle quartile. People understood bridging, were comfortable with it, didn't have any issues. Whereas at the older end of the market, they still harked back to the good old days when bridging was a bit of a free-for-all for everybody. Why did we do that? We wanted to get to a point where we could produce a white paper, which we did at the tail end of 2022. And we then started to talk to the national press about our findings. And why did we do that? We did that because we want to make the world of understanding of short-term lending much more simple and professional for the user to understand. And more importantly, we wanted to make the ASTL membership more approachable to the end user. And one of the things I always like to say wherever I am in any presentation is that my main aim is to make sure we look after the end user. They're the ones who pay our salaries. So if we could do that by getting the press to talk about short-term lending as not actually being the bad animal that it may have been seen 10, 15, 20 years ago, it would encourage people then to be comfortable about moving into using short-term lending. And from the ASTL's point of view, to come back to the nub of your question, if we could then encourage them to use ASTL members, so much the better. So that was one thing. If I may quickly go on, in 2023, we culminated the program that we'd been writing, which is known as the Certified Practitioner in Specialist Property. The acronym is CPSP. The idea of that being specifically to bring more people into an understanding of what short-term lending is all about. And by that, I really mean the people who sell it. There is no accredited regulatory examination in the marketplace at this time. But what we've now done is created a module of study and questions which people who want to be involved in the market can take. It's an examination which is moderated by the London Institute of Banking and Finance. The ASTL worked together with FIBA, and to date, we have almost 1,000 people who've signed up to take the programme, and I'm delighted to say that as of last week, more than 100 people had already passed it.
Thanks, Vic. From what you're saying there's definitely been an enhanced transparency in the market best practices through collaboration, education and training, which I think is great for the sector as a whole. So Vic, given the steady growth of the short-term lending market, has this resulted in any uptick in terms of debt recovery, receivership cases? And is there any support which is offered by the ASTL for its members and clients?
Actually, I'm glad you asked that question as well. It's such an important factor of our industry. We don't just have lender members in the group. We have, I think it's currently 44 associate members, and these are professional firms who deal with all aspects of the work that goes alongside what a lender does in bringing their funding to market. Now, in fairness, we have a professional with us who I really ought to pass that question over to, if I may. Over to you, Robert, if that's
I mean, obviously,
okay.
We are a proud partner to the ASTL, and I think in terms of that question, James, we have seen an uptick at MJ Group in our debt recovery, receivership and defaults workload, and I just think that's part and parcel, unfortunately, I'd say, due to the volatility in the debt markets over the last 15 to 18 months. This is quite a cyclical move within the industry, and we can foresee that definitely over the next 12 to 24 months, there will be more default cases that end up being processed via debt recovery, receivership departments. And again, that's something that we support as a business, and we're happy to support the ASTL in that forum, James.
Yeah, no, thanks, Rob. And just to echo that, I think it's important to have very good professional advisors in that capacity, which can enable 100% recovery to the lender, which also facilitates more money being recovered to the client, and for them achieving the best possible outcome in these cases, which obviously don't work out as hoped. What is the outlook for 2024, and what are the main goals and objectives for the ASTL?
Thank you. I think we want to continue the growth of the accreditation, the CPSP. We're looking more carefully at the data that our members provide for us every quarter. We're trying to find a way of streamlining the requests that we make of them to make it easier. But actually that data tells us an awful lot about the market each time we look at it. And one of the things that we're perhaps going to be doing this year as one of our initiatives is to create our own annual short-term lending report. That's really quite important to us to be able to do that. And the other thing is we are creating a small number of advice groups who will sit external to the board of the ASTL, but will be tasked with looking at specific areas of the market, reporting back to us with their advice as to what we should do.
Count on us, Vic, Super Prime UK. We will support you all the way on our specialism in that area.
Excellent to hear that. Thank you.
So, Vic, it's been brilliant having you today, and we're a great partner promoting ASTL and all of the lenders in the industry. We're really hoping for another strong year. Just want to close up with a bit of football talk. I know you're a big football fan, big Wolves fan. How do you see the season going, and maybe who's going to win the league this year?
Well, it's fascinating at the top, isn't it? I'm not one of those people who automatically says that because Manchester City have had the money and the players, they're going to win. I suspect that possibly Liverpool, Arsenal will have a big say in what happens at the end. As a Wolves fan, I grew up with them in the late 50s, early 60s. Good grief, yes, I am that old. When they were the top side in Europe. Despite my moving around the country, I've stuck with them thick and thin, mostly thin, but I will always give them my support. But I'm excited about what goes on at the top of the league as well. And you must be very happy that Arsenal are having a great season.
Yeah, I'm content. Let's see where it goes. James, what are your thoughts?
Well, I think that a lot of teams at the moment just they've got through that hectic Christmas period, and now they've got the AFCON Asia Cup at the moment, just trying to deal with injuries and players being absent from the squads. Wolves, big derby match at the weekend in the FA Cup against West Brom, and tough fixture against Man United, hosting us at Molineux next Thursday.
Molineux is becoming a bit of a cauldron for visiting sides at the moment, and I'm seriously hoping on that one they will get a result, because genuinely I felt the very first match of the season that Friday evening, Wolves outplayed Man United for the whole 90 minutes and lost 1-0.
Yeah, you're robbed of a penalty as well.
Absolutely were.
But
well, we're all friends.
Yeah. What job Gary O'Neill's done.
He's done a great job.
Wasn't offered the opportunity to stay on at Bournemouth, obviously, and has come into Wolves and really sort of transformed the side, really. The squad.
I was worried when he was given the job. Not that I know him, so I've got no axe to grind at all. But I love the way he presents himself, the way he speaks to the TV. I think he steadied the ship quite well. And I'm quite excited, maybe not for this season, but excited about what may happen moving forward with them.
Yeah.
Brilliant. Vic, so glad you could join us today. I hope everyone listening, watching, downloading, enjoyed the new format. CEO of the ASTL, Vic Jannels, our first guest of the year. And in the next coming weeks, we've got loads of new shows, loads more CEOs, and one of our EVA quarterly international updates in what is going to be a fascinating year with interest rates, with inflation, with elections, with all of the uncertainty and volatility that we've grown accustomed to in 2024. We're going to be with you all the way on Super Prime UK. Welcome back, everyone, and have a great, happy and healthy 2024. Thanks, James.
Thanks, Rob. And just a closing message for everyone watching. If you haven't subscribed already, please do so. It enables us to produce the shows on a bi-weekly basis, and obviously raises the awareness of the show and bringing everyone the news and data that we can to you. Thanks very much.